The Solana ecosystem has all of the right ingredients going on at the moment. It has the technology, it has the community, it has the developers. And with the next part of this bull cycle will come growing liquidity. Now, despite the summer pullback, we have seen the TVL in the Solana ecosystem continue to increase, and it is now outpacing most other layer 1 networks. According to DeFi Llama, the total value locked in the Solana ecosystem currently stands at just over $4 billion. And DEXs are where that liquidity is heading when people want to interact and leverage the money that they have deposited inside the Solana ecosystem. So welcome back to what is a two-part video series looking at two of Solana's most popular DEXs to understand which, if either, offers the best investment upside. During my last video, it was the turn of Jupiter, a relatively new kid on the block in terms of decentralized exchanges in the Solana ecosystem. So far, it has been a dominant contender in the space. However, there is another that is consistently chipping away at its market share. Although it's been around a lot longer, it is coming back in a big way. And that DEX is called Raydium, and its native token is called RAY, Ray. Before I get started with Raydium, if you enjoy the video, please hit the like button down below. It really helps the channel out. And of course, I would love to have you as a subscriber. If you don't want to miss out on videos like this in the future, also hit the bell notification icon too. And as always, if you're looking for an ally to help you navigate the markets on a weekly basis, it is so important to touch the market on a weekly basis and keep your finger on the pulse. And you need a guide, a resource to help you navigate that. My 80/20 crypto newsletter is the place I always recommend. Completely free. It's just one email per week to keep you in touch with the signals and separating that from the noise, and also handing down some valuable altcoin analysis and portfolio boost tips. So if that sounds of interest, the link to the 80/20 crypto newsletter will be in the description down below. And with all of that, let's get started with Raydium and see how it compares with Jupiter. Now, on the face of it, Raydium is just another DEX. However, you need to dive beneath the surface of Raydium to understand that this is the next evolution of the DEX infrastructure. It's a DEX 2.0. So in comparison to DEXs and other automated market makers in the Ethereum ecosystem, Raydium was built to be faster, it was built to be cheaper, and also far more intuitive. And it's primarily known for its central order book, which provides a familiar interface for traders and investors, because those are the interfaces that we're used to with centralized platforms. Now, there's no two ways to say this. Raydium's features don't stack up to the expansive feature list that is offered by its competitor Jupiter. Yes, users can take advantage of the lightning quick trade and swap functions. The platform's user interface is really good. Limit orders can be placed, which is a handy addition for most traders. And for those looking for enterprise solutions, Raydium's central order book can be accessed by other protocols that are building in the Solana ecosystem. In addition to that, Raydium also has a program called Acceleraytor, which is basically a launch pad for new projects in the Solana ecosystem. Now, in terms of its history, Raydium is effectively an OG DEX in the Solana ecosystem because it was founded back in 2020 by a bunch of developers that are using the pseudonyms such as Alpha Ray, X-Ray, Gamma Ray, Stingray, and also Razor. In the early days, the Raydium team joined forces with the Serum protocol, and some of you out there may remember this happening. So they teamed up with the Serum protocol, which was a protocol with order book capabilities that flourished in 2021. The mainnet for Raydium was eventually launched in February of 2021. However, Serum, the background protocol that was working away on the order book, was compromised in 2022 by the FTX drama. And as a result of that, Raydium transitioned across to OpenBook, which is a community-led fork of Serum. So that's something to bear in mind about its history. Serum was the protocol that was backing Raydium initially, but now it is something called OpenBook, which is a community-led fork of Serum. And this all happened back in December of 2022, I believe. Now, the native token of Raydium is Ray, R-A-Y. It's the utility token of Raydium, and it's primarily used to reward users of the DEX, like many DEX tokens are. So Ray can be staked in liquidity pools directly on the Raydium platform to earn additional rewards. Here we have Ray on CoinMarketCap, and as we can see, the market cap of Ray stands at $335 million. In terms of tokens in circulation, we can see that 555 million Ray tokens are in total supply, and out of that 555 million, 263 are in circulating supply, which means that there are just over 50% left to hit circulation. And now we come to the part of the video where we need to talk about the upsides and downsides to the Ray token. What are the things that could drive demand and therefore force the price of Ray through the roof, and what are the things that could strip the price of Ray lower? As always, you need to weigh up factors from both sides to see which elements could drive the price of Ray in the future. Now, starting with the upsides, if you remember back to the start of the video, I said that $4 billion was currently locked in the Solana ecosystem. Well, 888 million of that is locked within Raydium. And that's not just the USD value of older assets held within Raydium that is expanding because the price of Sol, for example, is on the rise. It is actually an increase in the total amount of native assets stored in the Raydium protocol. So since March of this year, we have seen a big climb in the number of Sol locked in the Raydium protocol. Now, another really unique feature of Raydium, which I think will help its progress in the future, is that unlike competitors, all of Raydium's features can be accessed from an easy-to-use mobile version. And this is a really cool USP, and one that I think could significantly help to grow adoption of the protocol in the future. So many people use mobile phones, and if they were given the opportunity to use a DEX on a mobile phone, I think a lot of people would take it. Thirdly, the majority of the team, advisors, and community seed Ray tokens are now within circulating supply, or at least they could be. So the vesting period for these tokens is now passed, which means that the inflation rate of the Ray token should be nowhere near as high as we've previously seen it, which it has been quite high. The emissions released from what's called the mining reserve are also halved every 6 months, which is an interesting deflationary mechanic. And then finally, from a technical perspective, in the near to mid-term, the technicals for Ray have looked quite strong. We've had the formation of higher highs and higher lows for the past 6 months, 8 months now. And this suggests that the token has been in a bullish trend. More recently, due to the macroeconomic sell-off in stocks and the fear there, we have seen a sell-off in the crypto markets as well, which has forced a drop below this previous low. So we may be on for a creation of a lower low. So we'll see where price takes us in the future. But most recently, over the last 8 months, Ray and the Ray token has been in a bullish trend. And then finally, to close out the upsides, another piece of really positive bullish news for Raydium is that the DEX has flipped the amount of fees collected on Uniswap. Now, although I think a lot of this action has been driven by Solana meme coins, which seem to be the hot thing at the moment, it does give the indication that at least Solana-based DEXs could be this cycle's bullish focus in terms of DeFi. And now we need to talk about the risks. What are the risks to Raydium and the Ray token? What are the things that could strip Ray of its price and see this as a nothing token held in someone's wallet? As I mentioned in my Jupiter video, competition in the DEX space is fierce. Although Raydium offers a very user-friendly and comfortable order book user interface, it does not aggregate liquidity from all corners of the Solana ecosystem like others do. It also doesn't have as many features, something that traders and hardcore DeFi users might favor. So time will tell which is preferred, and we can see here how volatile the market share of the DEX space is. Raydium appeared to be taking market share all the way up until into July, and then most recently in August, we've seen a pullback and we've seen Jupiter once again take over. Now, secondly, in December of 2022, the Raydium DEX was compromised for nearly $5.5 million. And after news of the exploit, the value of Ray fell by 8% and the TVL on the protocol fell by 27%. So investing in a token associated with a DeFi protocol always comes with that level of smart contract risk that you just can't account for. These protocols will be audited, they will be thoroughly checked, they're open source, you can check them. But even still, mistakes can happen. And when mistakes happen in a protocol like this, the native token is going to suffer. And then finally, I want to go back to the inflation rate, because the inflation rate of Ray has been incredibly high since 2021. It was more than doubled on 2 separate 12-month periods. And although the rate of inflation has slowed considerably since the start of 2024, with over 50% of Ray tokens left to enter circulation, inflation in the future needs to be considered a risk, especially if demand can't keep up. And this might therefore be another one of those tokens that you definitely don't want to be holding as we turn into the next bear market, whenever that might be. And that is everything that I have on Raydium and the Ray token. I am so interested to see which out of Raydium and Jupiter comes out ahead at the end of this bull cycle. So with both Raydium and Jupiter now analyzed, which out of these, if either, should be on your altcoin shortlist? As always, I save my own opinions for my 80/20 newsletter subscribers. So if you want to get my insights on altcoins like this, that is the place to head to. And as I mentioned at the start of the video, the link is in the description down below. It's completely free, 1 email per week where we look at the crypto signals of the week, portfolio boost tips, and altcoin deep dives such as this. I think the Solana ecosystem is looking so strong, and therefore the narrative of DEXs on the Solana ecosystem could be one of the best beta plays available. But I would love to hear your thoughts. Which out of Jupiter and Raydium do you prefer? Which out of the two tokens, JUP and Ray, offers the best potential upside as we head into the second stage of this bull cycle? And will you be adding either to your altcoin shortlist? Let me know in the comments. Thank you so much for watching. I hope you really took value out of the video. And as always, do your own research in every altcoin that you invest in. This is not a get-rich-quick market. It should be considered alongside other financial assets. Once again, thank you so much for watching, and I'll see you in the next one.